to another video about Bitcoin today. We're going to talk about. So, what did Bitcoin do yesterday? Well, it did exactly what the depths said it would do. If you look at the daily forecast of it, it went up, up, and down, right? And then it went. The down part was nice. The up part was also decent, right? If you're trading low time frames, there were plenty of little scalps to be had. More importantly, if you look at what is it doing right now, well, again, look at the depths. You'll see that we have a mixed bag today on the volatility on the daily forecast, right? So up, no trade, down. That's the current indication for the daily time frame. But of course, it does have a tendency to change around a little during the course of the day because of what happens on the lower time frames that affect the daily projections. Just like any time frame will have things on lower time frames that will affect its projections. Right? So was the daily projection for yesterday pretty accurate from the beginning? Yes, it was, because it did exactly that. Did it change up too much during the day? In fact, no, it didn't change. It was consistent. Yeah. By the way, those are not special effects in the background. Those are not AI birds that I've added in. Or maybe they are. These are not CIA operatives or spy cams in the trees. Are they? Birds are real, right? You know, that hilarious prank. Anyway, the point is that the VEPs made it very clear yesterday, just like every day, and likely today as well. Right? Showed pretty clearly what was going to happen across the higher time frames and the lower time frames. Why? Well, because that's how it works. And we use the highly relevant math to see exactly what is likely to happen. That's why, for example, if you look at our VRE charts, what's the VRE chart? Well, it's a chart full of incredibly accurate, mathematically based levels. We call them that. And they act basically as price magnets, if you want to call it that. Why is that? Well, not an accident. Those are not price magnets based on price. Right? Those are based on probabilities and returns. Right? How do we do that? Well, we have very smart math people and developer people in alpha trading. And they figured out how to make these tools for us incredibly accurately and improve, like anything that was an older concept. They completely changed it, made it all standard deviation based or Laplace based. So basically made it related to actual volatility, right? Just like they did with entropy. Well, entropy we didn't take from, the idea from it. There's nothing in the price based world to take that from. But our guys just invented a whole new entropy, indicator from the get go, something that has never been done in any similar way. And they added on top of that and made it even more powerful. And then they created something else with it too, the entropy oscillator, which is also incredibly powerful for finding divergences, just like the returns oscillator. To be frank, the returns oscillator is really the one you gotta use the most if you're going to be scalping on a regular basis, looking for divs. But very often the entropy oscillator is actually sort of the lead sniper, if you will, for those quick divs. I gotta say, it is incredibly efficient at scalping or making scalps available. Right? So yes, just like returns, when there's divergence between the returns and price, that's usually an occurrence of opportunity. And same thing with when there's a divergence between the entropy and price. The entropy oscillator as a occurrence of opportunity. It happens quite regularly. So yeah, if you use our tools, I highly recommend looking at that one, checking it out. It's part of your suite of indicators. No reason for you not to use it. If you don't use our tools, well, that's up to you. Thank you for staying on the other side of our trades and provide the liquidity that we need. Um, that should kind of be a wake-up call to you. We actually would prefer it if you don't get our tools. Thank you. I say that half jokingly because, of course, we want people to not get wrecked. And the way that happens consistently is if they learn to trade a better way to trade, like trading actually relevant maths, like the volatility, entropy, probability, and statistics, rather than the degenerate gambler's favorite set of tools, Voodoo TA. Right? And I can say that, having been a Voodoo TA user once myself for some years, even though I knew about a better way to trade beforehand. I know, remarkable. And I used to market, in the world of trading, platforms that were clearly not favorable to the average trader, that were rigged against them, that they had no chance of winning. Um, that's the way it goes. And the reason they didn't have a chance to win is because they were using horrible technical analysis, right? They were using bad information. Bad information followed by bad performance, bad results, So it leads to bad news for the trader, who is going to ultimately get wrecked, usually within 90 days. And that was kind of the norm in the industry and still is. In fact, it's even lower now, because now with crypto and high leverage, and people can trade 24/7, it's really just, it can happen very, very, very quickly. But we still say the 90-90-90 rule. We talk about that business, because that's generally how it goes for the most part, for people using even regular trading tools on the regular markets. But anyway, so yeah, what is Bitcoin going to do today? Well, I've already told you that the volatility on the daily is mixed. And that's actually very good if you're scalping. Why? Well, because it means it's going to be all over the place, up and down. The moves may be small, medium, large, doesn't matter. It's going to be moving back and forth. Going to be doing a lot of zigzagging on the lower time frames. Okay. What does that mean? It means it's going to be moving away from the means, right? The lower time frame means. And it's going to be mean reverting to those lower time frame means. How do I know that? Well, when you have mixed volatility like that, right? That means that on one volatility length, it's going to be going one way. Another volatility length is going to be going another way. And on the other volatility length, it's going to be going yet another way. So it's telling you it's going to be mixed. So don't be surprised until something happens and percolates, right? Look at the central daily range of the VRE. Is it tight? Is it loose? Right? If it's tight, like under 2% or 1% of the asset's value, then it's going to be a trending day. And you're going to have some nice little trending moves. If it's loose, then it's probably going to be a ranging day. You're going to have some nice little ranging moves. Right? So keep that in mind. We do these things every day over at Alpha Trading. This. The reason we do this is to help people learn a better way to trade so that they don't have to be stuck in a situation where basically they don't have any ability to be consistently profitable with their trades. And we're looking at helping people reach a status or situation where they're winning the vast majority of their trades. I like to put it like this: if you're not winning at least one standard deviation, 68.3% of your trades, you're doing it wrong. It's just my general take on it. Anything more than that is great, and you should be. You should be doing a lot better than that. But if you're not winning at least a little bit more than 2/3 of the time, then you're doing something wrong. Did I know that? Well, because when you have access to leading information that is always, spot on and accurate, because it's properly built according to the math, and those are the relevant maths that actually run the markets. And if you know how to read that information and take the appropriate action, then statistically, you should be on the winning side of the trade most of the time. Right? Of course, randomness can happen, and a trade can go against you, and that's why you pull out quickly when it does, like immediately. Don't wait to lose money and then see if it's going to come back. No, if it's going anywhere near your entry, get out. You don't want to be stuck in a trade or losing anything. It's just not worth it. You want to get into a trade when it's ready to move, and then you want to get out as soon as it makes the move. And sometimes you'd be like, oh, well, I didn't see that one coming. Right. So you're saying you missed a move? No problem. Statistically, you will never get all of the moves. So the trick is to worry about the moves you don't get. It's going to make sure you do win the vast majority of the trades that you do get. Right? When you make a trade, you want to make sure you win. And if you're not winning, then you want to make sure you get out. And when you do win a trade, you want to get out and you want to take your profit fast, early, and often. Because otherwise, they can turn around and you very quickly. Don't believe me. Look at what happened just 2 days ago. Right? The price went down, or 3 days ago, price dropped. And everybody's like, oh, no, it's going to the moon, it's going to the floor. And then it pumped. Oh, no, let's go back to the moon. And then dumped again. Got everybody wrecked who didn't take their profit. Do that. Good luck at trading.